So last week you created journal entries on revenue earned for each day. And I think most of you guys breezed through it. It wasn't too hard. It was pretty simple, which was good because I wanted to make sure you guys are starting off with a strong foundation because this week it's going to get a little bit more complicated. Now, from the previous video you watched, you know that Ramada needs a better understanding of its market segments. So, building off of what you did last week, we don't want to just create journal entries for the day. We want to create journal entries to give us a breakdown for each market segment for each day. So to do this, we have an Excel file that has a new tab called guest data. Now, this raw data tab is also one that is downloaded from my property management system, and it's a database that has information on all the reservations for every single person that has ever touched the Ramada. And it gets pretty detailed, I'm not gonna lie. You get the check-in date, the checkout date, you get the phone number and the address. Now, I don't want you to be creepy here and mess around with this information, so I might just go ahead and hide this. So why am I including this? Well, in order to distinguish these market segments, I need to know more about my guests than just their name. Because if you look closely at this accounting database, the one that you used last week, the name is basically, the only detail we get for each transaction. So the accounting data will tell us how much money I'm making, which is what you saw last week with the journal entries from the room charges. But the guest data, the new stuff that you see here, goes into detail about where the money is coming from which market segments. These two data sets work together to give us what we need. And I make them work together using what is known as a VLOOKUP formula that you see here. This tool serves as a bridge between my accounting data and the guest data. So these are new columns that you see here. They're building off of last week, building off of this accounting data, and they come from the guest data. So it's kind of like a accounting data 2.0, it's a more enhanced data set that now gives us enough information for us to distinguish our market segments. Now, for those of you that don't know much about this formula, don't worry about it now. We're just going to use the data, and I'll go over the formula in more detail in a different lesson. Now, the second thing I want to cover before we start is this price list. So quiz, are these the only prices for each date? If you said yes, I'd smack you in the head because they're not. It would just go against everything I talked about in the previous video. Because remember, we don't want one price models, right? The whole point of having different market segments is that we can take advantage of their different price sensitivities and have different price points. Now, these numbers though, what they are is they're my retail rates. They're my premium non-discount rates. You might even call them my highest rates possible for each day, but sometimes I do end up changing the rates based on demand, so it can actually fluctuate. So if you want to get technical here, they're basically my average retail rates. And again, keep in mind, these are not my only rates for the days. I have tons of other discounted rates, and don't worry about it for now, but I'll explain why this price list is important when we get to doing the market segments. So now, to make sure you guys don't get lost here, let's summarize everything. So we start off with what you learned last week. We still have our accounting data, the raw numbers that my front desk produced as they go through their day-to-day operations. Last week, you used this data to create journal entries and report revenue. But we don't just want to report revenue earned for the day, right? What you did last week was incomplete. We want to take it a step further by reporting revenue by the market segments for each day. Therefore, we take this new stuff, this guest database, the tab you see here, and we add it to the accounting data to make a new and improved database, accounting data 2.0 that now allows us to distinguish the market segments. All right, so this is how it's going to go down. I'm going to give you a market segment, and I'm going to briefly tell you what that market segment is. I'll then give you the restrictions for each market segment to create your SUMIFS formula. So last week I kind of held your hand, but this week you're going to have to create it on your own. Now, remember in the last video, restrictions consist of two parts: where the restriction is and what the restriction is. Where the restriction is and what the restriction is. It won't be hard because you're essentially doing the same thing as last week, except you're adding on more restrictions because we want to make it more specific. It's not just restricting it to room charge and date. We now need to restrict it to the specific market segment that we care about. And to make your life 20 times easier, I actually prepared a cheat sheet that basically clearly maps out what and where the restrictions are for each market segment. So this cheat sheet should actually be enough to help you do the work. I mean, I'm going to have this video to make everything more clear for you, but if you really just follow along this cheat sheet, you'll get it. So just to recap, this column is what column we need to add. This column is where the restrictions are, and this column is what the restriction is. And everything here, the formatting at least, these three different columns should be familiar to you. So let's get started. This is the first market segment, the retail transient market segment. And it's basically the customers that book rooms with premium non-discount rates. So think of that last video, okay, where I was desperate to stay at a hotel after freezing myself to death. I think at that point, I'm going to have a very high willingness to pay because I just need to sleep in a warm bed. And I don't care much about getting discounts. So for the SUMIFS formula, the first component is, what are we adding? We're still reporting revenue, so we add the dollar amounts in column K. We also have the restriction that it has to be on June 20th, and we have the restriction that it has to be a room charge. So this is all old stuff, right? You did this last week. Now here's the new stuff. I'm actually going to select column K again as my restriction, and I'll show you in a second why I'm doing this. But if you look closely at this column K, these numbers don't just consist of my revenue earned. They also tell me what rate the guest got. Let's use this example, okay? This cell here says $75. So that means that Chad Sommer's rate was $75 on the night of June 20th. Now let's go back to this price list I was talking about. If my premium non-discount rate is $75 on June 20th, would you say that Chad is part of the transient retail market segment? If Chad's rate is $75 and the premium rate is $75, is he part of the retail transient segment? The answer is, of course, yes. So just remember, the retail transient market segment are the suckers that pay the highest premium price. So how do I add this restriction to the formula? Well, I need to tell Excel that everything in column K has to be greater than or equal to this premium rate on the price list for June 20th. So everything in column K, including this $75 that I just showed you, has to be equal to or greater than this premium rate. So to tell Excel this, I'm going to put quotation mark, greater than sign, equal sign, end quotation mark, and then this and sign, and then the cell location of the rate. Another new restriction is this negotiated column. Now this column is going to have a number greater than 0 if a transaction is part of the negotiated market segment. So, do you think we care about this right now? No, this is totally irrelevant, right? We don't care about negotiated shit. Right now we care about the retail transient market segment. So, if in this column, if a number is greater than 0 means that that it's part of the negotiated market segment, how do we tell Excel that we don't want it? We got to make sure that the restriction is 0, right? We got to make sure that everything in this column is 0. It's going to be useful later on, but right now we don't care about it. So I'm going to create the restriction right now. I'm going to select the column, and I'm going to put quotation mark 0 quotation mark. Now don't forget, I put the quotation mark, and this is very important. Lastly, we have this group/wholesale column. Again, we don't care about groups or wholesalers right now, so let's also make sure that everything in this column is 0. Okay, yes, I agree. That was a lot of information to take in. But again, I'm mapping everything out in this cheat sheet for you, so making the formula, it's going to be pretty easy if you follow along. So since you just did the retail transient segment, it's going to make this next segment easy because you've basically already created most of the formula. This next segment is the discount transient market segment. So if our retail transient segment is the one with the premium non-discounted rate, then this is the segment with the discounts. So that cheap bastard that is looking for the cheapest discounts, he potentially could be in this market segments. So to be honest, this is really easy because the only change you have to make to reflect this is to change the greater than equal to sign to a less than sign. So if we use our June 20th example, the retail transient market captures every reservation that has a rate that is $75 or greater. So the discount transient market segment captures everyone that is less than $75. This is our next market segment, the groups market segment. So our group reservations come from two companies, JBS Hotels and Maryland Corporation. They bring us these two huge buses of international travelers that fill up 20 plus rooms at once. And because they help us fill up our rooms, we give them a ridiculously low rate. And this rate is fixed. And it's kind of cool, because they kind of just make my hotel so much smaller because they are able to help drive up our occupancy. So how do I reflect this in Excel? Well, remember this group/wholesale column I was showing you? In the previous two segments, we didn't care about them, right? So we made the restriction to be 0. But for this one, we do care about it because we want to capture every transaction that comes from JBS Hotels or Marilink. So for this one, our restriction for the column is JBS Hotels and a Marilink. Now don't forget there's a little star symbol before the word, and don't also forget the quotation marks around it. And I also suggest creating two different formulas, one for JBS and one for Marilink, and then you can kind of just add them up to determine the revenue earned from the segment as a whole. Now next we have our wholesale transient market segments. So these are known as FIT. They're called foreign individual travelers. They also pay a very discounted rate, but they are strictly international. And I'm actually still testing them out and seeing if they're even adding value to the hotel, but regardless, it's another segment. And they come from two companies, GTA and Tariqa Holidays. So the way you create the formula is pretty much the same way as the group segment because they come from the same column, but you just gotta designate the specific companies. So it's no longer JBS and a Marilink, but it's GTA and Tariqa Holidays. And again, everything's in a cheat sheet. And finally, we have the negotiated segments. Now these are basically friends and family that we hook up. There's this church that has helped us out when times were tough, and we just give them really good rates, especially during our busy seasons. So we really just hook them up. And you'll see later how this affects us. But remember the negotiated column right here? We now care about it because this is the negotiated market segments. So before we created restrictions that this column has to be 0, but because we do want to capture all the transactions that are in this market segment, we need to create a restriction where the number in this column has to be greater than 0. Because the number greater than 0 means that the transaction is part of the negotiated market segment. Alright, and that covers it, all the market segments. Now the next step is to convert all the revenue you earned, all the revenue you broke down into journal entries. So I think the best way to help you visualize this breakdown by revenue into different market segments is to show you how it looks like on Excel when we do the actual journal entries. So we have here what we did last week, right? We have the accounts receivable, the room revenue, the accounts receivable, the sales tax payable. This is all stuff we did last week. I'm going to first move the accounts receivable and sales tax payable down to below, and we're going to focus right now on this room revenue, because as you can see, there's a negative $2,798.57. We're going to break that. That is only for the revenue earned for the day, but again, we want to break it down by different market segments. So what we do is we go into the calculated revenue that we have done with the different summit formulas, and we also have the different revenue account names here in the cheat sheets. So what happens is we want to copy over the revenue accounts by different segments into the column G. So we're going to start off with the retail market segment, and then we're going to copy over the revenue earned for that market segment. Now notice, don't forget that because we are crediting this account, it has to be a negative. So there's a negative $1,431.25. And I'm just going to go ahead and do each one here. So now we're doing the discount. Moving on to the group market segment. Now when I finish this, something is going to magically happen. Because a great way for you guys to check your work and just make sure you're going on the right track here is that the total amount that you make for the day. So when you just make the restrictions to only the room charge and the dates, just like you did last week, that total amount should equal to the total amounts of the different market segments. So when I do a quick sum formula here where I add up all the different market segments, which are negative of course, and then I add that amount from accounts receivable, notice how it perfectly balances out to 0. So this is when I know that all my formulas that I created before are correct, when it magically just balances out to 0. So finally we can now move my account receivable and sales tax payable back up, and we are finished for June 20th. And again, that just concludes this week's lesson. If you have any questions or concerns, as always, just feel free to hit me up via phone or email. All right, thank you so much.